Hey guys, I'm Kalilah Reynolds and it's time for Money Mondays, brought to you in partnership with Proven Wealth. Well, it's going to be a sizzling summer on the stock market. Last week we had two IPOs dropping, Sagicor Select Fund and Epley Caribbean Property Fund. You know, the Lab IPO is also coming up soon, and I'm also aware of a couple others and I'm not quite privy to speak about just yet. Today though, I'm going to be reviewing the Sagicor Select Fund SSF IPO. If I have time later this week, I'll review Epley, but I can't make any promises. So here are the broad details. SSF is selling 2.5 billion shares at $1 Jamaican a share. They also have the right to upsize the offer by another $1.5 billion if they got a lot of subscription. So in all, they're seeking to raise up to 4 billion Jamaican dollars. That's about 31 million US dollars for those of you watching from abroad. Now, they've reserved 1 billion shares at 98 cents each, half for clients of Sagicor's Sigma Fund as of May 31, and the other half for Sagicor employees. The offer opens July 3, that's next week Wednesday, and it's scheduled to close July 17. But unlike Wigton, it's on a first-come, first-served basis. So if you're interested in this IPO, you want to get your application in well before the offer even opens. The minimum subscription is only 1,000 Jamaican dollars. They've clearly been inspired by Wigton in making it this affordable. The lead broker is Sagicor Investments, but you can use any broker to sign up. They intend to list on the main market of the Jamaica Stock Exchange within 4 weeks after the offer closes, if they raise at least $500 million. If not, they'll just give everybody their money back. If they're successful, they intend to use the money to buy shares in the 23 companies that make up the Jamaica Stock Exchange's financial index. Those companies are spread across banking, insurance, capital markets, and real estate. Last week, I spoke with CEO of Sagicor Investments, Kevin Donaldson, and fund manager Reynaldo Thompson on my radio show Nationwide this morning. Here's how they explained it.
What Sagicor Select Funds is allowing you to do is to own a piece of the financial industry. So basically, for $1,000, you will have access to all the profits that these companies make. So if fees are high and it bothers you, it means that profit will come and trickle down to you.
You mean banking fees?
Whatever fees you're concerned about. It's just what I always tell people. I buy companies that I use their products, right? So all of us, most of us have banks. Most of us have to get insurance. Most of us have to use money services, get remittance or whatever. So why not benefit from the profits that they make? This is what Sagicor Select Funds will do for you. Instead of you having to go out and buy each of these individual companies, just take $1,000 and you can buy.
And it's not just that we're giving investors exposure to equity market. We're giving them exposure to the sector that we believe will perform the best over the near to medium term.
And has been performing very well.
Has been performing the best, and it's the main driver behind the stock market. So if you look at the numbers, it's the sector that actually is driving the stock market.
So here's a look at the full list of the 23 companies that comprise the JSE's financial index and will comprise the SSF. And you can see that it's weighted by market value, with NCB, Scotia, Sagicor, and Panjam making up 80%. What they're doing is investing in these 23 companies and seeking to provide returns in line with the performance of these companies, so that by purchasing this one stock, you get the benefits of investing in all 23, which would be difficult because some of them are very expensive, like the leader NCB, which closed on Friday at $191 after jumping $11 on the news that it was selling Advantage General to Sagicor. According to the prospectus, they're only seeking to mirror the financial index. They don't want to outperform it, so they say this makes it less risky than some other managed funds. Now, why did they choose the financial index specifically? Well, like Reynaldo said, it's the most successful and profitable industry on the stock exchange. When you look at the performance of these 23 companies over the past 5 years, they grew 329% between 2013 and 2018. Last year, 17 of the 23 companies grew, and the financial sector represented 4 out of the top 10 advancing stocks last year. On average, the stock prices of these 23 companies appreciated 65% last year. So if you had invested $10,000 spread across all these companies last year at the same weighting the SSF is using, you would have ended the year with $16,500. If you had invested $10,000 in 2013, you would have ended 2018 with $42,900. Not bad. Now, they have some 5-year projections, how they expect these companies to perform between now and 2024, and it's rather promising. First of all, there are two main sources of income: dividends from these companies and appreciation when the stock prices go up. They're projecting dividend income will grow from about $60 million this year to about $139 million by 2024. They also expect the net asset value to rise from $170 million to $555 million in the next 5 years, mainly due to the stock prices appreciating. After expenses, they're projecting net investment income to grow from $194 million to $643 million. That's growth of 230% over 5 years. So let me break that down. They're essentially saying that if you put $10,000 in this fund today, they expect to grow that to $33,000 in 5 years. Put in $1 million, you get back $3.3 million. Now, of course, there are risks, as there are for any investment. First of all, past performance doesn't guarantee future results. Just because these companies have been doing well over the past 5 years doesn't guarantee that they'll continue doing well, although all expectations and forecasts are that Jamaica's economic conditions will continue to improve. But there's also a risk that all these companies are in the same country and the same industry. So if there's some economic shock or market force that affects the industry, they could all be affected at the same time. Also take note of the weighting of the stocks. Remember, I told you earlier that even though they're technically investing in 23 stocks, 80% of that investment is concentrated in just 4 companies. So if something was to happen to any of those big 4, especially NCB, which is weighted at nearly 40% all by itself, it would negatively affect the entire fund. On the other hand, I also want to leave you with something Kevin said in our nationwide interview. Even though they need the $4 billion to buy up these financial stocks, they've already pumped $1.4 billion into this.
The stocks, we have bought 1.4 billion worth of stock already for the fund. It's already in the fund at prices that are far below where the prices are now.
Yes.
So investors should just read between the lines and understand that
there's value
already in this fund. Mm-hmm. And the second thing is that Scotia declared a big dividend. Scotia is already in the fund. We're paying out all the cash in this fund to shareholders in quarterly dividends. So it's going to have a good cash flow.
Quarterly, nice.
Yeah.
I'll be posting that full interview exclusively on my YouTube channel. It's too long for IGTV. Now I advise you all to read the prospectus if you're considering this investment. It's only 51 pages and fairly easy to understand, not overly technical. Guys, please don't ask me if you should buy this stock. I'm not a licensed financial advisor. I'm a journalist. My job is to give you information, not advice. But I can give you a referral if you DM me. I hope you found this information useful. Like, comment, share with a friend. Hit that subscribe button on YouTube. That's youtube.com/Kalilah Ray. Follow me on Instagram at Kalilah Ray. That's all for now. See you next week.